morning and welcome to ANZ News. It's Wednesday, the 20th of January. Creeping ever closer to the start of February when the rest of the world really starts to work. Today we're talking the great financial divergence. We are currently witnessing a financial fundamentals divergence of an order never before seen. In one corner we now have ex-Fed chair and Uber Dove, Janet Yellen, in charge of the fiscal side of things in the US, and Dove's successor, Jerome Powell, the current chair of the Fed, in charge of the central bank money printer. Both love a good money print. In the other corner, we have precious metals and now Bitcoin as hard monetary assets that no one, regardless of how dovish they may be and in what office they hold, can simply print or create more of beyond the fixed constraints of physics, chemistry, and maths. Addressing congressional lawmakers during her nomination hearings, she told them to go big on COVID relief spending, hinted at no major tax hikes in the short term, and raised idea of infrastructure spending as well. This in addition to Biden already laying out the first $1.9 trillion fiscal stimulus package. That, however, is in the near future. The Trump administration didn't exactly go easy. The latest US deficit figures are out and, you guessed it, another record, the worst in 76 years. Here's this chart here for US federal deficit or surplus to GDP in percentage. So how did they fund that? As chart author Crescat's Octavio Costa tweeted in reference to the chart shown. Let this sink in. In November and December, the government issued $505 billion worth of Treasury notes and bonds, the largest two-month issuance ever. The Fed only bought one-third of that. No way around this. Monetary policy is clearly becoming a funding tool for the government. Here's that US Treasury notes and bonds issuance graph here. By contrast, we have gold supply that increases by around 2% per year, and likewise silver, which when compared to the enormous money supply looks poised to explode. Here's the silver to money supply graph shown here. And then there's Bitcoin, which is actually supply deflationary, with the halving of supply every 4 years. This from the words of its creator back in 2009. Total circulation will be 21 million coins. It will be distributed to network nodes when they make blocks, with the amount cut in half every 4 years. First 4 years, 10.5 million coins. The next 4 years, 5.25 million coins. The next 4 years, 2.625 million. The next 4 years, 1.3125 million coins, etc., etc. We have written extensively before about the halving, with the most recent just last year. When mapped against stock-to-flow fundamentals, the price action has been remarkably correlated since inception. Fund manager Pantera Capital did a deep dive into this last May in an investor letter and gave a forecast presented both graphically and in a table with the update to the present day to see how it's tracking. It's tracking remarkably accurately, with their forecast of US $38,000 by last week bang on. You will note then that they are forecasting $115,000 by August of this year. And yep, that's not a typo, $115,000. Here's that graph here showing halving stock to flow projection. And also in a table, just so that's a bit easier to read for some people. The basis of their projection stems from the historical correlation with halvings and stock to flow analysis, as we've depicted in this next chart here. This chart shows post-Bitcoin halving rallies, which if you're in the Bitcoin market, you know all about that. Gold has a stock-to-flow ratio of around 60, a number that it's been for years. That essentially means it would take 60 years of current production rates to get to the current total gold stocks. Bitcoin, with last year's halving, is hot on its heels at 50. Whatever the number, both precious metals and Bitcoin strike a massive contrast to the currency expansions that the world is currently seeing. Let us leave you with a chart that we shared last week that put this into perspective. Here's the global central bank assets. Annual change in USD billions. That is out of control. This is incorrectly called monetary stimulus. This is not money, it's fiat currency. Real money must have an intrinsic value. History is literally littered with failed fiat currencies. Gold and silver has survived the test of time, and Bitcoin is rocketing up to join them as a new, pristine asset. Well, that's news for today. A nice blend there between gold, silver, and Bitcoin news. And keeping in track with that. About ainsleyBullion.com.au for all things fiscal. A few kookaburras left, like we talked about yesterday. 1 kilo silver kookaburras for 2021. Beautiful coin. you can grab it online now. ANZwealth.com.au for all things cryptocurrency. After a bit of Bitcoin, that's the place to go. And also goldsilverstandard.com. Blend of two worlds, this beautiful stablecoin built and backed by real physical gold and silver, built by Ainsley and stored at Reserve Vault. Enjoy your Wednesday, and we'll catch you tomorrow for more news.